Eric Mother, Mother.com. First trading session for 2019. Let's take a look at markets here with about 1 hour to go, less than an hour. Just want to kind of discuss some of the things that we should be watching as we go through the beginning of this year, the first month. So let's begin with where we are, and I'm going to begin by taking a look at the 4-hourly chart for the NASDAQ. And what I'm going to discuss here is a simple line going back to this breakpoint on the 4-hourly, again for the NASDAQ futures. We broke down here off that level, and we're going to take that information and draw our uniformity line. Should be something like that. And it gives us the resistance level here, and we see it showing resistance here. So as we begin the year, short term, that's the level to watch. Now, would you expect the market to drop just because of that resistance, or drop immediately? No. I'll tell you why. And to understand this in a simple way, the market is not ready to drop until we have the MACD confirming that it is dropping below zero and the other MACD going below zero. In other words, put another way, both MACDs would have to be below zero before we can get a strong move lower. So that's why it always seems to take forever, even when we see, using our uniformity method, that there is some type of resistance here that the market is responding to right now. But once you see that, you can start taking action, understanding that there's actually two things that can play out here. Is we might get this continuation of this MACD. We can get a crossover that is above zero for the MACD, which actually might change the picture, especially if the market was to clear resistance. So if the market was to clear resistance, if the MACDs were to hold above zero, that is actually the flip side of this argument, which is actually the market goes higher. If the market is to go higher, you don't need to panic, because price would have to confirm this, and this would be very simple. All you'd need to do is wait for confirmation that the market clears this level. So if a market clears that level, then that's a bullish sign. Right now, what I'm saying is, looks like we are considering more the idea of resistance based on this line. And my point is, it might take a while before this is actually the resulting into a bigger drop. Hope that makes sense. So early signs of a pullback, yes. Don't expect a strong drop just because of this signal here, but expect the market to be coiling, and then if there's going to be a big drop, both MACDs have to be below zero. Right? And again, if the market is to move higher, simple thing to do is just understand that any movement above recent highs in price is the signal that the market actually wants to probe higher prices. Now again, we are anticipating a pullback based on the RSI, but we are not necessarily expecting a big drop until both MACDs are below zero. Now, for the month, and I discussed this in the weekend analysis video, for the month, we have to be very sensitive to what the RSI is doing. We discussed this at length over the weekend, that any movement that brings, for example, the NASDAQ back above 50 is a very strong sign of intent that the market is looking to move higher. So let's just keep that understanding in mind. And for example, if we take a look at the Dow, even with the current small drop at the open of the year, keep in mind that the Dow is still holding above 50. Remember, this is a monthly chart. It's going to take a while to play out. So what I'm going to do, and the reason for this video, is we need to be aware of where markets closed on a monthly basis, with the understanding that we don't want to go against the RSI 50 movement. In other words, take any major average, and this is the RSI 50 level. Any market that is moving this month below 50 would be a bearish sign. So we would not want to go against this drop below 50, and for any major market that would be more above 50, that would be a bullish sign. We would not want to go against that, right? So we need to understand where the market closed at the end of the year in terms of the major averages. So for example, the Dow closed at 51, around 51.228. So for this month, we have to be aware if the Dow is dropping below 50, chances are momentum is going to be to the downside. If the Dow is holding above 50, and especially if it turns positive this month, it could be a sign of finding support at the RSI 50, which net we should understand and respect is indication of intent to move higher. We don't want to trade against that strong energy. Conversely, if you take an instrument, for example, the Nasdaq, you can see the Nasdaq at the end of last month. In fact, let me change this. So we can see the closing RSI level. So then the Nasdaq closed with its monthly RSI at 48.49, around that level. So we know that if it turns positive and moves above 50, we have to be very sensitive to something like this period, which set the stage for this major recovery. And if it cannot recapture the RSI 50 level, then we can continue anticipating a continuation of this recent market slide. So those numbers are very important in tracking them. And so given where the RSI, for example, for the S&P 500, which closed at 47.21, is what this means is more than likely we get a very volatile month, as all these numbers are going to be fighting for position either above or below 50. The Vanguard Total Stock Market Index, ETF, was at 43.73. That was a close. Take a look at the Nasdaq 100, closed at 50.67. So any drop below 50 this month might suggest a big down month or the continuation of the recent slide. Take a look at the IYR, which closed at 49. So all these numbers are going to be in play. And so more than likely we get a volatile month, because at some point we are going to be above or we're going to be below 50, suggesting big movement in store, in my opinion. Take a look at gold, which closed at 52, close to 53. We have to understand that if it drops below 50, that will be good for a big down month, similar to this period here, where it dropped back below 50. If that is to be the case, take a look at GDX, which might actually be having an opportunity of moving higher, since the RSI closed at 49.21. So if it moves above 50, expect gold and the miners to be moving higher. Take a look at SCO, which is an ETF that tracks crude oil, closed at 52, had a big month, relatively speaking, up 12%. If it drops below 50 this month, or whenever it drops below 50, expect a big down month for this instrument, a good up month for crude oil. Instrument like ZSL, which was down big, down 16%. Why? Because it dropped below 50 on the month of December, which means any movement back above 50 would be good for a recovery month. So all these numbers have to be respected. The semiconductor ETF SMH, just another way of looking at semiconductor index, If it moves above 50, expect a recovery for the market. More importantly, if the market can hold above 50, bounce back above 50, we start looking at the probability that the market wants to move higher over the next for 2019. So in other words, if this can bounce and hold 50, it might be suggesting we're going to test the highs here, which means over time a market that wants to come back and test these highs. So we have to respect that, and we know if we are unable to hold above this level here and we continue drifting lower for 2019, it might suggest a major market meltdown. So all these things are going to play out. We can even track stocks like Apple, which closed at about 48, to see whether it can bounce back above 50, which would be a strong indication of market recovery in the tech space. Otherwise, failure to hold would suggest continuation of the recent slide. So big implications as to what the market is going to be doing relative to where it closed for the month. Let me share with you one more. This is for the Oil Services ETF, or IH, which closed below 30.9. What that means, if it continues trading below 30.9, that suggests continuation of downside pressure on a monthly basis, and recovery back above 30.9 would be a sign of a market that wants to start building stability around here, if not start building a base for recovery. So very early on in the year, very early on in the month, but those are the price levels to watch, or the RSI levels to watch. Holding above 50 generally is a sign of bullish intent. Dropping below 50 generally is a sign of bearish intent. The fact that we are trading around 50 suggests to me that we are looking at a market that is going to be very volatile, as there's a lot of forces either trying to go below 50 or above 50. And because of this fight between 50, above or below, expect volatility, which is exactly what we are getting as we open the month. In other words, don't go against any movement above or below 50, because that will be determining the strength, direction, and momentum to whichever it is going. Right now, as I began the video, looks like the market is showing resistance, but until the MACDs on a short-term basis are both below 0, expect it to be looking like it wants to drop, but no momentum to the downside until both MACDs are below 0. Eric Moore with Mother.com. As always, good luck, peace, and blessings. And of course, I'll keep you guys posted. Happy New Year. Have a great, happy, prosperous 2019 ahead. I am out. Mwah. Woo. Cheers.